Julian Pennock is with us as guest host in the studio this morning. Julian is with us from Senhouse Capital. He manages money. Good morning, Julian. Good to see you. Jim Rogers is joining us on a camera now out of Zurich. Jim is the CEO of Rogers Holdings, of course. Jim, good morning to you. Jim, we're sort of through this 12,000 level on the Dow here, and we just seem to be hanging on to it with our fingertips here. What's your call on where we go with equities near term?
Well, Jeff, I don't own very many equities. I haven't bought many equities in a while because I don't know what's going to happen to the world economy, but I expect more currency turmoil, more social unrest, more governments collapsing, so I'm investing in currencies and commodities rather than stocks.
Commodities and currencies, so pick some for us, Jim. Let's get you to just explain what your investment thesis is right now.
Jeff, I've been explaining to you and everybody on CNBC for a year and a half or two now that food prices are going to go through the roof. They're going to explode. It's happening. I still would buy agricultural products. We have serious shortages of everything developing, including shortages of farmers. This is a serious thing which is going to last for a long time. It's going to cause more upheaval in the world, and it's going to cause the investment opportunities.
I caught up with the head of Syngenta when I was in Davos, Jim, and Syngenta's a company that makes crop protection, chemicals, pesticides, fertilizers, and his line on this was that farmers are responding, that in 12, 18 months' time, we're not likely to see any crisis in the supplies of soft commodities into the market. Isn't that an indication that perhaps we should be a little wary about chasing the agricultural food price rises that we've seen?
Well, I hope he's right, but he's not right because the inventories of foodstuffs around the world are the lowest in many years, or near the lowest in many years. Jeff, the average age of farmers in one major agriculture state in the U.S. is 58 years old. In 10 years, those guys are going to be 68 years old. We have shortage. In parts of Japan, they have no farmers. I mean, this is not just farmers responding. Of course, farmers are going to respond. But we're going to have more problems in the weather. We always have anyway. We have huge shortages of inventories. We have shortages of farmers. I would like to think that's the case, but it's just historically cannot be. Jeff, it takes 7 years for a coffee tree to mature. Orange trees, palm trees, you don't just snap your fingers and suddenly have some more palm oil. All this takes time.
Jim, isn't there a risk, though, that what we're seeing in these commodity prices, given that they all seem to be correlated, is a response not to demand, but to the QE, to the printing of money, to financial speculation? This is not demand-led inflation in commodity prices, is it?
Well, Jeff, I'm sorry to disagree with you, but first of all, QE2 is part of it. Whenever governments have printed money throughout history, people put their money into real assets, whether it's rice or silver or natural gas. People protect themselves. People don't just sit there and say, oh, give me some more paper money that's being debased. That's part of the problem right now. But the more serious problem is, you say it's not demand. Go to India, go to China, see how people are changing their lives and how they're using more. But it's also supply, Jeff. Commodities are based on supply and demand. You could have demand go down, but if supply goes down more, you're going to have a bull market. This is simple stuff, and it's happening right now. And by the way, I heard your comment about evil speculators.
Hello everyone, welcome to Global Government News. Today is Tuesday, February 8th, 2011, and I'm Darko. Welcome everyone to this economic news bulletin. Please visit my website, www.ggnonline.com. That's ggnonline.com. And it looks like right here we have 1 day left to vote for this poll. The recent political upheaval in the Middle East will most likely result in a positive outcome for most people in the region, a negative outcome, or whatever the powers that be desire. And of course, you can choose not sure, but as of right now, it's 50% say a negative outcome for the people in the region, and following and second is 32%, whatever the powers that be desire. So, and I'll be able to cover that, if not tomorrow, the next day, and the updates of what's going on in Egypt and the Middle East. But we're going to stick with the economy on this one. And the first one we have here is euro gains versus U.S. dollar, Swiss franc as risk reigns. And it says here an appetite for riskier currencies strongly favored the euro versus the U.S. dollar and Swiss franc on Tuesday, with more gains seen as slightly calmer headlines from the Middle East reduced the appeal of safe haven currencies. And you have analysis, investors' eye correction, defensive rotation. In coming months, U.S. stock investors may find the best form of offense is defensive. The steep gains in equity markets over the past several months, the S&P 500 is up 25.8% since September 1st, has sparked concerns stocks are overextended. The correction many expected has not yet materialized. Investors are rotating money around equity sectors rather than moving out, a trend that may dominate for several months. And I tried to get, I actually came across an article that spoke on the same issue about this, about the market correcting itself, and I couldn't find it when I was going back. I basically have about 60 articles for these two videos, so it's sometimes they just get lost. Stocks climb on takeovers. It says faster global growth as U.S. Treasuries retreat. And just stick with me. This is kind of the raw data, the stocks and that, and oil. And then I get into the more interesting articles about unemployment and food prices and that. So just hang in there. Stocks climbed, driving benchmark U.S. and European indexes to a 2.5-year high as takeovers, faster global growth, and reduced tension in Egypt boosted investor optimism in the economy. 10-year treasuries fell while Egypt's bonds rose and its currency weakened. We have oil falls as Egypt and supply disruption fears ease. Oil prices fell sharply on Monday as concerns about Egypt's political turmoil affecting oil flows in the region eased. An investor focus returned to rising U.S. inventories and a tepid employment picture. And we have gold. Gold jumps 1% on inflation fears technicals. Gold rose 1% on Tuesday to its highest in nearly 3 weeks on a combination of inflation fears, a weaker dollar, and a breach by spot prices of key resistance at bullion's 100-day moving average. And we have here gold may boost from collateral use, MF Global says. Says gold may get a boost as JP Morgan Chase & Company joins the two biggest U.S. future markets and allowing the metal to be used as a collateral for trading, according to MF Global Holdings. And we have gold futures rise as inflation concerns mount. Silver tops $30, so that's good for silver owners or investors. Gold futures climbed to a 2-week high on demand for a hedge against rising consumer prices. And it says here, after China increased borrowing costs to slow inflation, silver advanced to a 1-month high, topping $30 an ounce. And to me, if I had money to invest in metals, which I've had before, for a short period of time, I'd be investing in silver. That's just my thing. Business Insider, $2,000 gold and 10 more surprising predictions from Credit Suisse. It says you're not going to make money betting on the consensus. So if you're looking for contrarian investments, Credit Suisse's Andrew Garthwaite has picked out 11 economic events that are more likely than anyone thinks. It says gold goes up when real Fed fund rates are negative, and they are. It says excess leverage leads to money printing or default, and China and Japan haven't started buying gold yet, and they have started, and I'm going to start covering that soon. It says here, U.S. Number one, U.S. GDP growth 2.6% is the consensus. Credit Suisse says 3.4%, and in the fourth quarter, it says U.S. housing prices, the consensus is a 5 to 10% decline in 2011, and Credit Suisse says an 8% decline. Let's move down here. China's growth slows down, inflation a concern, policy tightening, and we're going to move down here. Gold $1,350 to $1,500 an ounce is the consensus view. Credit Suisse says $1,500 an ounce. Of food prices, a 10% decline is a consensus, and then Credit Suisse says 5% upside, and it says risk food prices rise another 20%. So there you go. And then we have this KWN source, expect massive Chinese gold buying using what is this GLD, and it says the contact out of London has updated King World News of the massive Asian buyers which have been accumulating both gold and silver. The London source stated, quote, what we've been talking about for the past few months, the Asians, particularly the Chinese, buying staggering amounts of physical gold has just gone into the mainstream media. The Financial Times was months behind King World News in reporting this information. And you can go in there and check this article out. Links will be posted in the YouTube's video description. You can check that out. Now we have this article. That's what I was saying. It starts to get more interesting here. China tops world in gold output in 2010. It says here China, which became the world's largest gold producer since in 2007, retained its position again in 2010 by mining 340 tons, up 8.57%. Oil fluctuates as gasoline surges. China raises interest rates. Oil fluctuated near a one-week low in New York as gasoline futures surge on speculation that refinery shutdowns may limit stockpiles of the motor fuel, and China raised its interest rates. It says $200 a barrel of oil. This man says no way. And it says here that the man is Nassanin Salari, president and CEO of Quantum Reservoir Impact and former head of reservoir management at Saudi Aramco. And I appeared on CNBC's Squawk Box this morning and was asked about the chance of Egyptian unrest causing oil prices to spike even further, and he downplayed the effect it would have on the world markets. Quote, Egypt only produces about 750,000 barrels of oil a day, which is a little less than 1% of the total world output of 82 to 83 million barrels a day. So I guess he's talking about Egypt. And you can go down here and check this out. I'm going to keep moving, though, just for time's sake. It says natural gas falls to 6-week low on forecast of mild weather. And then we got here gasoline supply rate rises to 18-year high in survey energy markets. U.S. gasoline stockpiles probably climbed last week to the highest level in almost 18 years as demand for motorists declined, a Bloomberg News survey showed. No emergency meeting for OPEC. So the head of OPEC says an emergency meeting will not be held even if crude prices rise to $120 a barrel. So this is not good news. We reported this, about a week or two ago, about OPEC having secret meetings in order to increase production and how they weren't supposed to meet until July. But I guess they're not going to meet until July or later than that. So that's not good news. For anyone that drives a car a long distance to work every day. It says copper retreats from highs, and it says here copper futures slid slightly as traders cashed in on record highs. The most actively traded contract for March delivery fell 45 cents to settle at $4.57 a pound on the COMEX division of the New York Mercantile Exchange. It hit an intraday record of $4.63 in electronic activity overnight. It said China moves to strengthen grip over supply of rare earth metals. China is building strategic reserves in rare earth metals, an effort that could give Beijing increased power to influence global prices and supplies in a sector it already dominates. America poised for a hyperinflationary event. And you can come in here and check out this article. Link is posted. Going to keep moving. Official cash rate could rise sooner than expected. And so the acceleration of the mining boom and further pressure on the labor market on the back of the massive rebuild needed in the flood-ravaged Queensland could put pressure on the Reserve Bank to raise the official cash rate sooner than expected. This is in Australia, of course. China raises rates to battle stubbornly high inflation. China raised interest rates on Tuesday for the second time in just over 6 weeks, intensifying a battle in the fast-expanding economy against stubbornly high inflation that threatens to unsettle global markets. Then we have this. Underground World hints at China's coming crisis. To understand how far ordinary Chinese have been priced out of their country's property market, you need to look not upwards at the Beijing shimmering high-rise skyline, but down far below the bustling streets where nearly 20 million people live and work. And we have China could be forced to bring a new global recession by 2015. Bloomberg on Sunday cited a 28-page report, The Financial Crisis of 2015, An Avoidable History, PDF version below, by Barry Wilkinson, a London-based partner at consulting from Oliver Wyman. So if you're interested in that, you can go in there and check that out. So 2015 says China makes fake rice from plastic. So China's having some problems. Just replace it with plastic food, I guess. Pizza Hut does that with their cheese. Corn prices to soar as Chinese imports increase 9-fold compared to official projections. Cotton, wheat, rice, and now corn. And keep moving here. Growth or hot money, what's really affecting food prices? The Dow rose another 29 points on Friday. Gold lost $4. And they basically go in there and talk about Bernanke and QE too. So a lot of speculation as to why the food prices have risen. Is it because of Bernanke and what they're doing as far as the buying up, the stimulus, I guess you can call it, bond buying program? Or is it just the market? This is just a shortage of supply. So it's a sugar shortage looms as storm ruins Australian crop. So good example of what I just. So please join me in part 2 of this economic news bulletin. This is GGN, and I'm Darko.